Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO Founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Ken Esch, partner and trendsetter barometer leader at professional services firm PwC, about the firm's most recent survey of U.S. private company executives.
Just jumping in, I mean, the report sort of indicated to me a kind of a ambivalent outlook in the sense that it was, everything kind of stayed the same. I mean, there's not a ton of optimism for super growth, but there's also not a ton of pessimism either. I mean, is that the right take?
Yeah, I think that's a fair characterization. One of the things that we looked at closely were the uncertainty levels about the economy.
Yeah.
And we compared those back to prior election cycles, and found that this is, a rather common, sort of scenario where uncertainty levels just rise, leading into an election. And I think the question is going to be, now that we have elected, a new president, what's going to happen, in this next fourth quarter survey? And in the past, we have seen some of those uncertainty levels fall and move more towards an optimistic, picture.
Right.
There have been, situations where the uncertainty levels, remained high. Probably most notably with the Bush-Gore election cycle, where a lot of controversy rolling out of that one. And I'm looking forward to seeing what the results are this time around, because this is just such a unique election cycle that we just went through, and a lot of focus on the individual candidate as opposed to some of the policies, and some question marks, frankly, as to what the policies are going to be leading in there. And I don't see that settling before the end of the fourth quarter.
No, I think I'd agree with that. Yeah, and it's an interesting dynamic, because you would think that a Trump presidency would, at the very least from the regulatory side, would be viewed favorably by business. Clinton is not known for her, from a policy perspective, not known for her restraint when it comes to using the federal government.
Right.
For regulatory purposes, right? And my one sense is that a Trump presidency would be good on that score at the very least. And of course, then there's the whole Obamacare thing, which is out there. It's
well,
a lot
I think that there's been talk about rescinding presidential orders from under the Obama administration, kind of right off the bat. Now we'll see. If he follows through on that, and if he does on which of those, orders, if just not all of them,
right.
And what kind of impact that's gonna have. You just look at like the immigration, picture, and many of our clients and those that participate, in the survey, looked at immigration as a source of talent. And if we have a tighter, immigration policy, many ask themselves, well, what does that mean to my talent pool? And how am I going to find those qualified workers that, frankly, over the last, several years, they've had some challenges finding them. Yeah,
I mean, that's obviously been a big issue. So it'll be interesting to see how that all plays out. I was interested, given the overall tone of the attitude of these leaders. I was interested that operational spending is still, planning to rise. I thought that kind of stuck out as kind of a contrary. So there's a sort of a middling optimism. The operational spending is still going to crank up. That's interesting. I mean, what's your take on that?
I view that as a positive, fact in the report. And I think it's consistent with, private companies maintaining a long-term view on their business. And, even though, we've seen, higher uncertainty levels, and we've even seen, these leaders pull back on their growth expectations, they're continuing to invest in the business because they know that these cycles pass and that they're going to want to continue to build that business so that they're prepared for the next turn in the economy.
Yeah. It's again, I think you point out in the report, it's kind of the difference between a private and a public.
Right.
The private can afford to be more patient and continue on with their plans, which is
right.
Yeah.
Because you even see some of the public companies out there, if they were lowering their growth expectations, you might expect them to start to pull levers within the business to pull back on spending, and that could come in the context of operational spending, or it could even come in the context of the number of people that they employ. And in our report, we're not seeing companies are expected to reduce headcount over the next 12 months. I mean, those are rock bottom readings out there. Now, they may hire a little bit slower, than what they've done in the past, but, I wouldn't even expect or call that a trend, at this point. But they're not, reacting, to this uncertain environment or, a lower growth environment, with reductions in their spending or headcount.
Yeah. The one thing that really jumped out was the M&A decrease or interest in M&A. That I kind of like to look at this from a retrospective perspective, I guess. There's been this projection for the last, 3 years, 4 years, that an explosion of M&A is right around the corner, right? Because all the baby boomers who own companies are getting to retire. The private equity groups, there's this pent-up demand to sell companies because their 5-year window is up, and all these factors, this sort of perfect storm that there's going to be this explosion of M&A.
Yep.
Doesn't seem to happen, And this latest report, I mean, it sounds like it's even less likely to happen, in the near term. What's your thought on that?
Well, as you point out, the readings, for companies expecting to, acquire a business are at record lows. I mean, it's like the record lows for the survey of the history, survey history out there. So it got our attention as well. And I would tell you, just by looking at the overall M&A market, I mean, there are some very large deals out there, consolidation type of plays, and a lot of them in the public space, because these public companies need to demonstrate the ability to grow both top line and earnings, and in this environment it's difficult to do it without M&A support. Now, if you look at it from a private company perspective, you have less pressure, to deliver, the top line and growth and continued earnings. You can be a little bit more selective, about the deal, and I think that selectivity is driving a lot of these results, because if you look at what's going on in that private company space, the multiples on EBITDA for transactions are very high. And even though we got low interest rate environment, I think a lot of private company leaders are taking a pass because they just don't want to overpay.
Right. Yeah. No, that's actually something I've heard too. That the expectations are on the multiple side are just too high.
Yeah.
It'll be interesting to see when that changes.
Right.
Either the sellers will get a little bit more realistic, or the buyers will be a little bit more aggressive. I mean, it'll be interesting to see how that plays out. Because I do think, I mean, again, we've been saying this for several years, but there is going to be a rush at some point where people are just going to, I mean, just in terms of people's private, in terms of people's life expectations. I mean, there's a lot of people that probably want to get out, but they can't part with their companies without that high multiple, and I think that's at some point that's going to have to flush itself out. But
Right.
yeah, it's interesting. It's interesting.
And I think I've read a lot of statistics out there just about the sheer number of companies, run by baby boomers who are nearing retirement or even older, and there's going to be a significant transfer of wealth from that generation down to the next generation, and oftentimes that wealth is wrapped up in a business. And we hear a lot about companies that really don't have a clear succession plan between generations, and that even puts a little bit more pressure on perhaps selling the business.
Yeah, no, I know some folks in the succession planning business, and they're going gangbusters right now because you're right. There's a lot of these folks that they've just never thought about it, or if they thought about it, they've never done anything about it. So, yeah, interesting. In terms of the hiring side of things, jobs, it doesn't look terribly robust. It doesn't look like there's going to be mass layoffs, but it doesn't look like a terribly robust environment. Which makes sense given the overall sort of middling attitude. But what you did point out in the report is that there is increasing concern, it would appear, about the cost of doing business with respect to hiring, right? And
right.
I mean, it sure appears to me that public policy is creating a real drag on hiring. I mean, is that a fair assessment?
Yeah, I think when we talk to companies, the salary that they pay is a component, but it's just a component of the overall cost of bringing someone on. Healthcare, is a significant number. Just the process of onboarding, a person, getting them trained is expensive and time consuming. And a contributing factor to that is that we've got a group of long-term unemployed who are re-entering the workforce as companies kind of continue to hire at a measured pace. And while those individuals may have some relevant skill sets, they oftentimes are not prepared to walk in and contribute to the business right away. And companies have got to do some specific skills training, to get them up to speed with current technology and the way that the business operates. So there's a real cost to bringing people on that may not be captured within our survey results when we ask questions about wage increases in the future, because I think a lot of wage increases have been curtailed in the event of rising healthcare premiums that companies are covering mostly for their employees.
Yeah. Yeah, no, it's that the governmental impact on these things is increasing, and it'll be interesting to see how this all fleshes out in a new administration.
Right.
On the international side, again, there seems to be kind of a middling perspective. There doesn't seem to be a ton of optimism, although the middle market or private companies are not backing away. It seems to be kind of steady as she goes. Is that about right?
I think that these companies are continuing to pursue international opportunities. Most of it is in the jurisdictions where they currently operate, as opposed to expanding into new markets. So I think that they recognize that the international business opportunity is significant, and that if you want to outperform from a growth rate perspective, international probably needs to be a component of it. And even in the emerging markets, specifically, can supercharge those growth rates. So I think that they know that it's going to be important, that they need to be there, but they are letting things settle down. I think with Brexit, for example,
Right.
With questions about what's going on in China as they transition more to a consumer, based economy and what that means, for the businesses. But certainly not abandoning any of those international expansion plans.
Yeah. No, it's interesting. So I guess overall, as we do every time, overall, how would you sort of summarize the state of play based on the report?
I look at it as, kind of a moderately positive report, in that the companies are continuing to invest within their business, even though there's a lot of uncertainty around the election and the economy. So I view it as some real positive signs within the report.
Yeah, that was kind of the take I had too. I guess we'll see how it goes. Quarter four ought to be an interesting. It'll be interesting to see how the reaction to the post-election environment is. That's for sure.
Absolutely. Yeah, because I think the results were a big surprise to a lot of people out there. I don't think that people expected we were going to have a Republican president and Senate and House. An amazing political story. No matter what side of the aisle you happen to sit on, it was just a fascinating election cycle and process.
Please check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.